Welcome to the Problem 1-4 tutorial. We're to prepare an income statement, a statement of changes in equity, and a balance sheet using our answer from Problem 1-3. The answer from Problem 1-3 is copied here to help us formulate an answer to this question. We'll begin by preparing the income statement. The income statement reports revenues and expenses, so this is the information we need from the Transactions Worksheet. Revenues and expenses are detailed within equity, specifically within the retained earnings account. The format of the income statement requires a 3-line title consisting of the name of the company, the name of the financial statement, and the date line. The date line on the income statement always details a period of time. In this case, we are reporting on the month ended August 31, 2015. The income statement lists the revenues and expenses, the difference of which equals net income or a net loss if expenses are greater than revenues. On the Transactions Worksheet, there are 3 revenue transactions totaling $11,500. That amount is included in the revenue section on the income statement. There are 6 expenses on the Transaction Worksheet, which are transferred to the expenses section of the income statement. We need to include a line for total expenses of $3,250. This results in a net income of $8,250. The next statement we want to prepare is the statement of changes in equity, which, like the income statement, has a 3-line title where the date line represents a period of time. Why a period of time? Because the statement explains how equity changed during a given period of time, in this case, the month of August. To detail the changes in equity during August, we need to include 3 columns: share capital, retained earnings, and total equity. Since this is the first month of operations for Larson Services, Inc., we know that the opening balances were 0. From the Transactions Worksheet, we know that $3,000 of shares were issued during the month. We show that information on the statement of changes. Net income causes equity to change, given that revenues and expenses are equity accounts. We get the income information from the income statement prepared earlier. The resulting ending balances are calculated and must agree to the respective column totals on the Transactions Worksheet, and they do agree. Next, we prepare the balance sheet and begin by including the 3-line title. Notice that the date line on the balance sheet is very different than on the income statement and statement of changes in equity. Here, the date line is a point in time. This is because the balance sheet shows balances on a specific date. The balance sheet includes 3 sections: assets, liabilities, and equity. Recall that the balance sheet is the accounting equation: assets equal liabilities plus equity. The Transactions Worksheet shows 5 assets: cash, accounts receivable, prepaid expenses, unused supplies, and truck. We report the balances for each of these assets on the balance sheet in the asset section to give us total assets of $23,000. Next, we transfer the 3 liabilities: bank loan, accounts payable, and unearned revenue, and their respective balances to the liabilities section of the balance sheet. Total liabilities are $11,750. The final section to be completed on the balance sheet is the equity section. The equity information can be drawn from the Transactions Worksheet or the Statement of Changes in Equity. The ending balances on the Statement of Changes in Equity are transferred into the equity section on the balance sheet. Remember that the sum of total liabilities and total equity equal the total liabilities and equity. Additionally, the total assets must always equal total liabilities and equity. As a final note, please be sure to recognize the important link between financial statements. The income statement is prepared first because the net income or net loss feeds into the statement of changes in equity. The ending balances calculated on the statement of changes in equity feed into the equity section of the balance sheet. The three statements are linked. The income statement and the statement of changes in equity are both included in the equity section of the balance sheet. The justification for including separate statements for each of the income statement and statement of changes in equity is to provide greater detail. And that concludes problem 1-4. If you have comments about this tutorial or suggestions on how we might improve these tutorials, please contact the Student Support Center.